In the aftermath of the recent election, the market has been experiencing a notable upswing over the last 3 days. Amidst this rally, the S&P 500 has seen substantial gains across almost every sector, sparking intriguing speculation about the potential performance of a certain sector which, as per experts like Tom Lee, could not just surpass the S&P 500, but possibly even double its performance in the coming years. In this video, we'll explore the reasons behind this sector's prospects for robust growth and delve into an ETF that could offer an attractive investment opportunity within this space. Notable among the standouts of the past 3 days' market performance are small caps, including small cap stocks and ETFs. Take for instance the ETF IWM, tracking the Russell 2000 index, which witnessed a 6% surge on the day the election results were confirmed. Our previous discussions have hinted at the potential for small caps to outperform in the coming year, given the policies of the new administration. However, there is additional critical data that further bolsters the optimism for small caps and warrants close attention from all investors aiming to stay well informed. Examining the new administration through the lens of deregulation, we find a headline that carries significant implications for both financial stocks and small caps. This stands to open up doors for banks to expand lending practices and potentially reduce minimum capital requirements, offering small caps greater access to funding and avenues for growth. Moreover, corporate tax cuts represent a substantial boon for small caps, which typically face higher effective tax rates than larger international corporations. Similarly, the impact of tariffs is favorable for small caps, given their reliance on domestic revenue generation and insulation from foreign competition. Furthermore, interest rate cuts hold immense significance for small caps, which often carry more debt relative to equity, particularly with variable rates on their debt. Lower interest rates translate to cheaper borrowing, a major advantage for small companies dependent on external financing for their expansion and growth. Moreover, historical trends reveal that small caps have traditionally traded at a premium compared to the S&P 500 since 1987. However, recent interest rate shifts have caused small caps to trade at a significant discount relative to the S&P 500, with a forward PE ratio now half that of the S&P 500. With recently announced interest rate cuts and government policies promoting deregulation, tax cuts and tariffs, there appears to be strong momentum for small cap stocks to resume trading at a premium relative to the S&P 500. It's important to bear in mind, however, that while these market indicators present promising opportunities, they are not without associated risks. Factors such as inflation and potential consequences of tariffs must be carefully considered, as they have the potential to impact small caps' market performance. Given the significance of these market dynamics, selecting the right ETFs becomes crucial to navigate market volatility. One promising example is the AVV, or Avantis US Small Cap Value ETF. Established just 2 years ago, this ETF focuses on undervalued securities boasting high profitability ratios, steering clear of underperforming companies and aligning with fundamentally strong small cap stocks. AVV's unique approach revolves around identifying highly profitable small cap stocks trading at low valuations, primarily through an assessment of a company's adjusted cash from operations to book value. This strategy has positioned AVV to outperform large-cap ETFs during market downturns, capturing only 25% of the downside relative to IWM, underscoring its potential to minimize risks during market fluctuations. It's essential to note that small caps often carry more volatility relative to the S&P 500, emphasizing the critical nature of diversification in mitigating risks. AVV ensures robust diversification with a portfolio containing over 700 different stocks, not allocating more than 1% to any single stock, a testament to its dedication to maintaining a well-diversified portfolio. In conclusion, with the evolving market landscape and anticipated impact of the new administration's policies, it's paramount to meticulously assess the potential opportunities, along with risks, In the small cap sector, ETFs like AVV present an avenue for investors to potentially benefit from these shifts, incorporating prudent risk mitigating strategies and capitalizing on the anticipated favorable market conditions. Thank you for tuning in. If you found this content valuable, consider subscribing for more insightful content and give this video a thumbs up. Stay tuned for further discussions, and I look forward to seeing you in the next one.